Welcome to The Market Made Simple. That's what I've been doing for 50 years. Hi, my name is Phil Grandy at philsgang.com. Let's get started. What's going on with the stock market? What should you do? Well, we got the answers. Let's take a look at the spiders. You can see the spiders have been in a beautiful rally until December. Now they're just going sideways. Take the Qs, beautiful rally. Look at this. Not only going sideways, but starting to drop a bit. Now let's take a look at IWM. Look at this. It's breaking down. That's right, IWM. And why is IWM so important? Watch IWM. That's the Russell 2000. The reason why that's so important, because every professional, all the institutions that drive the market, this is what they look at, because it has a wonderful ability, a powerful forecaster. It tells you what's going to come in the future. It's never wrong. And it's closely, the reason, because it's closely aligned to the financial health of our economy, because it's closely aligned to the labor market, which the labor market is everything, okay? So, but IWM is warning. It's telling you something's coming, okay? Now, since December, we have not had the institutions really participating. We haven't broken out, so that's got to tell you something. One, yields are too high. That's because of the inflation. Now, bank stocks. Bank stocks, money has been flowing out of tech stocks and other sectors into the banks and into gold. That's where money's going. And you can see it here. The bank sectors have been pretty strong. But what we're doing with the banks right now, we're staying with the banks, but we're being a little cautious with them. But we do like them, okay? And we've been in them. But we've been really doing terrific with our gold. You can see we got into our gold right in this area right here. We're doing great. So why is gold doing so well? Well, because the smart money knows that something is happening, because they're watching IWM. And they're not willing to go in and buy the tech stocks. Well, why is it the tech stocks, every time they sell off, they seem to go up again? Well, it's because you have the tourists who don't know what they're doing. The tourist investor, the retail investor, who buys on every dip. He doesn't know IWM from a corkscrew. And he has no understanding of the market. He has no clue. So he's just in there buying tech stocks thinking he's going to get rich. Now, IWM, as I say, is very important. So let's take a look at the growth stocks. Everyone says, should I be in my growth stocks? So think of growth stocks as tech stocks, or should I be in value stocks and bank stocks? Well, let's take a look. Again, you can see a problem here with the growth stocks, which is lined up, of course, with the tech stocks, like the Qs, not really going anywhere since December. Now, you look at the value stocks, look at the difference. The value stocks are breaking down, which, again, tells us that IWM, right, is giving us some good information. So this is not good. I would not be in value stocks. Now, information technology stocks are very important. Let's take a look at those. Same thing. If you look since December, no money's going in those either. In fact, on my color-coded chart, it's telling me money is coming out. Remember, I built this chart 25 years ago. Over 200,000 people have used this chart because it follows the money and saying money is coming out of the information technology stocks. And then, of course, discretionary stocks. And they're not doing well either. Lastly, consumer staples. Consumer staples, there's a little action in the staples, but I just don't like that group. But at least you know there's some money going into staples, but most of the money is going into gold. That's where we are, and going into our bank stocks, although we're being very cautious with those. So remember, IWM tells you what the market is going to do in the future. It's never wrong. Now, for more information on individual stocks, my picks, my charts, click the link to my bio.